Hello, traders. This is Ophir with ForexPlaybook.com. I did want to offer a brief market update today. Take a look at the price action that we saw. A very broad rally for riskier assets in general. Really something that we came into the week expecting. Of course, the weekly playbook issued each Sunday, July 4th through 10. We're looking for a short week that's going to bring about short covering, which is in fact what we've seen over the last couple of trading sessions. For those of you who do not look at this weekly playbook on a weekly basis, it's really there to offer a guide for the coming week of trading, what it is that you want to look out for, whether it's a news event or particular price levels that we want to focus on for the coming week. And this week, of course, was basically a recommendation to start taking profits on our short positions. Right? We should look for an opportunity to take profits. We are expecting a bounce that could last 2 to 3 days, which is pretty much what we're seeing so far. We were looking for key levels on the Dow and on the S&P, both of which were broken through today. The Dow being 10,000, we broke into the 10,000 and change, as well as the S&P 1040 level. We actually hit 1060 today, so we took out two key technical levels for the S&P 500 in a single trading session. But now what we're looking toward is tomorrow's news, which is going to cover the retail sales numbers here in the U.S. And for the most part, we remain pretty skeptical as to any. I just would not expect a positive number at this point, even though markets were rallying today on expectations that we might see better than expected retail sales numbers. I do not think this will occur. It's not a news event I want to bet on. What I want to look for is a bad number, in which case we want to start shorting immediately. We want to get back into any profit covered positions we got out of. For one example, I did cover KB Homes today. Of course, many of you will recognize that KB Homes was one of the premium trade articles that we offered a few weeks back. It was ends up being for us almost 40%, a 40% move for us in just about 4 weeks' time. Issued June 2nd, we price around $14 a share on KB Homes. Got out yesterday around $10 and change. It was a very good move, 4-week move. Of course, equities markets were down. Many people are losing their money. We, of course, are taking the short side of the market, and we turn a very big profit on that one, as well as the other trades that we were looking at as well. But really going into tomorrow, we want to take a look very closely at those sales numbers for an indication as to whether we're going to have continued rallies for the next couple of days here. A good sales number, we could see rallies go into next week for this simple fact that markets, traders are heavily short right now. So when you see today's moves, you're seeing disproportionate moves in those securities that have been heavily shorted. For example, we can look at a couple stocks that I pay attention to. One, in fact, that I'm long in, Trina Solar. Solar in general has been a sector that analysts and traders have been down on for quite some time. I began buying Trina Solar since the BP spill, which at which time Trina was somewhere around 16, maybe $17 a share at that time. You know, of course, in the last 3 weeks, we've seen very negative price action, and at the same time, I'm looking at a near 30% appreciation for this stock, much of which, of course, today being a very big move, $1.25. But of course, throughout the week, it was quite strong. But this is one of those names, along with, let's say, the steel sector, U.S. Steel, Allegheny. These companies have very heavy short interest. And as a result, when we start seeing rallies like the one that we saw today, and even for the most part yesterday, you're going to see these particular stocks move disproportionately to the overall market. An almost 6% appreciation for Allegheny today. On U.S. Steel, we're looking at almost 6% as well. I mean, these are very big moves relative to the market. It's 2 times what the market is moving, right? You have 2.5 or 2.8 on the Dow, 5.6 on U.S. Steel and Allegheny Technologies, as well as Trina Solar, and that's sort of your beta right there, right? The beta is going to give us a measurement against the major index. In this case, we're looking at 2 to 1 in terms of beta, and as discussed on numerous occasions, when we're looking to take on some risk in this market, we want to trade high beta names, but we want to do so through options. The principal reason being that we don't want to be overly exposed really to the long or the short side. For the most part, in this particular area, We do want to engage more through the options market than the actual securities market. When I'm shorting KB Homes, I'm actually I'm long options. I'm long puts on KB Homes, for example, which again I got out of yesterday and today. But the idea is that on a relief rally like today, I'm not going to sustain those overall moves. It's really through the options market, a derivative market. And of course, if any of you have questions about the options markets, about trading, you can always feel free to send an email, a brief email to us here. Contact Forex Playbook. I'm here to, answer questions, just report on the day's activities, and really help you in any way I can. But looking ahead, key news event. What we're really looking for. Excuse me, I keep unplugging my headphones. What we're really looking for in the days ahead here, as far as let's say the longer term trends in the markets, forex market, equities markets, broader markets really, is going to be these stress tests. That news came out today where you can see here on the headline, the EU stress test will assume Greek debt loss of 17%. Now, this is a very optimistic view of Greek debt right here, which even JP Morgan came out afterwards. Not after I reported, actually they probably came out earlier than I did, but when I first saw this number I was shocked. Of course, we reported afterwards on real quickly on JP Morgan is stressed about the stress test. There is a link to this article here. You can go ahead and copy and paste that into your browser. But really, JP Morgan is looking for somewhere around, I believe it's a 35 to 50% area for Greek debt to be conservative to even the more pessimistic view. I'm looking for a write down similar to what you see on the mortgage-related securities, mortgage-backed securities from a couple years ago here in the U.S. I do not believe this number, whatever comes out of these EU stress tests, will not encourage any additional risk taking where the EU banks are concerned, and as a result, it's not going to help the euro that much either. The euro will resume its downtrend. Now, I'm not recommending you start shorting the euro right now at these levels. In fact, the only way I would play the euro right now is on euro crosses. For example, the euro Swiss offers a very nice trade right now. It's at 133, give or take. The Swiss National Bank came out today. They did not come out today, but some data came out today that seems to indicate the Swiss bank will again start to intervene in this market. We're looking at sluggish CPI numbers, which indicates deflation, which is exactly what the S&B is trying to combat right now. And the way they're going to combat that is through the euro Swiss. They're going to be devaluing the Swiss franc, purchasing euros, and their target, or the assumed target, is the 130 handle. So what happens when a target gets whispered out there, when dealers are looking at the same numbers, traders like ourselves are looking at the same numbers, it almost becomes it's self-fulfilling. Okay, so we're going to see the 130 handle in due time. I'd need to look a little more at the risk-reward structure on the euro Swiss right now. I wouldn't necessarily. I'm not trying to tell you right now, go ahead and short it. You do want to be able to locate a good stop area, make sure that it's paying off well, and of course you want to jump in front of the S&B. You want to get out by 130 and 130.50, right? You don't want to take it all the way down to 130 and get caught up in a 200 pip, 300 pip spike as a result of intervention. But another way that we'd look to play this particular the S&B trade is going to be through the U.S. Swiss. Okay, so what happens is once the S&B is actively devaluing the Swiss franc, if the euro continues on a downtrend, it's going to reflect through the U.S. Swiss by making the U.S. dollar far more valuable against that Swiss franc. And that's what we saw several weeks ago. We started seeing the U.S. Swiss creep up to the 120 handle. I believe it hit as high as 118 or so, and then turned around. And it's turned around as a result of the lack of intervention in the intervening time. Right at that time, we saw the S&B holding the Swiss franc around the 140 level. We've seen a 1,000 pip decline since then, give or take 800 pips, let's say, or 700 pips, excuse me, at this point. And at the same time, we've seen an equal move or even a greater move in the U.S. Swiss, a 1,000 pip move lower for the U.S. Swiss. So two ways to play this one. We can short the Euro Swiss now ahead of the meeting, or excuse me, the expected intervention, and take advantage of about 300 pip gift from the Swiss National Bank. And then afterwards, as we start approaching that 130 handle, right around that 130.50 when we cash out of our Euro Swiss trade, we probably want to pile into that US Swiss trade and take advantage of the upside that again we'd expect as a result of Swiss bank intervention. Anyhow, that's it for now. Any questions? Again, support at forexplaybook.com. We'll talk soon.